Hello students, good morning students. Now it's time for your accounts class and from your book Accounts Double Entry Bookkeeping. Yesterday I started one chapter named Introduction to Accounting with you, and yesterday I discussed with you the summarizing point. Under summarizing point I discussed financial statements, and under financial statement trial balance, trading and profit and loss account. So yesterday I discussed with you some elements of trial balance and few are left. So today my topic trial balance with terms and trading account. So first of all, what are the objectives of trial balance? Trading account gives the information about the gross profit. Now how to compute gross profit? Total revenue minus the direct cost of production, that goods or services. So first of all, revenue means income earned after sales. So sales total amount minus when you deducted the direct cost. Direct cost means on production any cost, when you deduct it is considered as gross profit. Second objective, ratio of gross profit to sales can help the trader to compare his performance year by year. So with the help of gross profit you can compare your performance year by year. Like in previous year gross profit 10%, now 12%. You can compare easily. 2% increase, it means favorable for the business. Third point, ratio of direct expenses to sales with the help of trader to ensure that the expenses are controlled. You can also compare the expenses controlled or not in the business. If this year more, last year less, and same sales, same income revenue of the business in both the year, it means your expenses increased. Fourth point, ratio of cost of goods sold to sales can help the trader in fixing the price of his goods. So with the help of cost of goods sold you can also fix the price of the product. First of all, know about the total cost, then add the margin, then you can fix the price very easily. So see the next point here, key terms. In my yesterday's topic few key terms left. So number one here, key term, discount allowed. So with the help of example and just understand the what is discount allowed. Bina Watch Company Delhi purchased 25 pieces of time start brand wrist watches from the Pioneer Watches Delhi at list. So from Pioneer Watches Delhi at list price of rupees 2000 per piece, less 10% trade discount and cash discount of 2% on the payment within 15 days from the date of transaction. So here two parties available, one is Bina and one is Pioneer. And Bina purchased, the Bina Watch Company purchased watches from the Pioneer, and the name of the watches time start, and the per piece rupees 2000, and two type of discount provided here. One 10% trade discount and second one cash discount 2% if the company payment within 15 days from the date of transaction. So see the solution here. Total amount is equal to total pieces available. See how many pieces available? 25 pieces per piece, 2000. Total amount 25 pieces multiplied 2000 per piece, total 50,000. First of all, the dealer provided trade discount. If trade discount provided 50,000, 10% trade discount, 10 divided by 100 is equal to 5,000. 50,000 minus 5,000 is equal to 45,000. Next, cash discount of 2%. Amount after trade discount 45,000, apply cash discount 45,000, 2 divided by 100 is equal to 900. 900 deduct the cash discount, So here amount is 44,100. Only cash discount available if the payment by the Bina within 15 days. Otherwise only trade discount. So after deducting trade and cash discount amount 44,100. So here after the example of discount allowed, the definition: most businesses offer discount to attract and retain the customers. For attraction and retention of the customers, discounts provided. You may reduce the price during the holiday session or by launching a new product line. You can give the discounts to the consumers. Two types: cash discount, trade discount. Cash discount, which are offered as incentive to the customer who pay within a specified time period. For quicker payment, the retailer shopkeeper provide the discount to the consumers. And trade discount, the amount by which a manufacturer reduces the retail price of a product when it sells to a reseller or rather than to the end consumer. And this is most of the time provided by the wholesaler to the retailer, not to the customer. Like suppose previously retailer wants to purchase just 20 units and the cost rupees 2400, but now he said, if you purchase from me in bulk, more quantity, then I provide you more discount. So here wholesaler provide trade discount to the retailer, not to the consumer. The next point is bad debts. Example: Sohan is declared insolvent and received from his official receiver 60 paisa in a rupee on a debt of 10,000. So total responsibility of the Sohan is to provide 10,000 but declared insolvent, bankrupt, and 60 paisa, total 100 paisa, 60 paisa received. So how to find out received and not received? Like see, first of all, received. 60 paisa in a rupees received, 10,000 total, 60 divided by 100 total, so 6,000 received. And not received, 40 paisa in a rupee not received, 10,000 total, 40 divided by 100, 4,000 not yet received. So see, total debt: received 6,000, not received 4,000, and not recovered amount considered as bad debts of rupees 4,000. So here 4,000 which is not received considered as bad debts. Now, what is trial balance? So students, after explanation with the help of examples, see the definition, see the meaning of bad debts. If any amount, say on account of credit sale, is not recoverable or is partly recoverable, then the irrecoverable amount is accounted as a bad debts. Like in my previous example, 4,000 from Sohan is considered as bad debts. Now the next term is journal expenses. So Ramesh started business and bought capital in cash of rupees 1 lakh as on 1st April 2019. On April 4, paid rent 500 plus CGST, SGST at 9% each. On April 15, he also paid postage 1,000. So here journal expenses which a company incurred on day-to-day work, day-to-day operations. So find out here rent is 500 is your journal expense and postage is your journal expense of 1,000. Here 1 lakh is not your journal expense, it is type of capital invested in the business. So see the meaning. Journal expenses are the cost a business incurs as a part of its daily operations, separate from selling and administrating expense. Now the next term is capital. See one example. Gupta Bros Lucknow started a business with cash 1 lakh, 5 lakh in check, furniture worth rupees 20,000, a building valued at rupees 5 lakh, and the goods worth rupees 15,000. So here find out the capital. Capital invested, number 1, cash invested 1 lakh, then bank account by check 5 lakh, furniture worth rupees 20,000, a building worth rupees 5,000, and also the stock of goods 15,000. So all these things considered as capital. While starting a business, the person invested, the person name is Gupta, invested, the amount is considered as capital. Money invested in the business while at the starting point is considered as capital. With the help of one diagram, one sum C, prepare a trading account for the year ending 31st March 2019 from the following balances as 31st March 2019. So with the help of one example, understand how to maintain trading account. Here I already discussed with you in my previous lecture what is stock. Stock is the simply goods, raw material in the godown available. Wages, when we are providing wages to the daily workers. Sales simply means sale of goods by the company to the consumers, and in return the company earn the income. Return outward, it means that firstly we purchased and due to some defect we return the goods, is considered as return outward. Freight also, it is type of transportation expense, like see here, freight. Goods that are carried from one place to another place by ship, lorry, is considered as freight. Now next point is purchases, simply purchases of raw materials, semi-finished goods for the final production. Carriage inwards is type of transportation, cost for purchasing raw material. Return inwards, now here return inwards, so company sold the goods just because of some defect. Consumer when returned the goods is considered as return inward. Firstly outward sales, then now inwards due to any defect. Octroi duty, see octroi duty. Octroi is a kind of a charge or a tax which is collected by the state government on those goods that have been bought into the city state for the purpose of personal use or resale. So here personal use or resale. The charges on items are generally levied after on the weight. Firstly we considered weight, in this case value, and total number of goods, then only government imposed duty. Next, closing stock as on 31st March 2019 was valued at 20,000. Closing stock at the end, raw material available, semi-finished goods, finished good available in the godowns of the company is considered as 20,000. Here two type of stocks given. Number 1 stock, that is starting point 1st April 2018. Starting the year, accounting year starting point here 1st April, 10,000 available at the end 31st March 2019, stock available 20,000. So full-fledged statement here provided. Now how to make trading account for the year ending 31st March 2019. First of all, see beta, particulars amount column, particulars amount column. One is debit, one is credit, and all your expenses etc. in your debit side, see, and all your incomes, if you receive any commission, anything you receive, credit side. Okay, one by one, see. First of all, always number 1.2 opening stock. Opening stock means 1st April accounting year starting stock available in the company. Here accounting year 1st April till 31st March. Here see your accounting year here 1st April 2018 till 31st March 2019. So stock 10,000, okay, recorded. Now the next after this is sequence 2 opening stock, after that 2 purchases. See the purchases, 1 lakh purchases recorded here. Now less returns, purchases return. Yeah, it means return outward. So here see return outward 8,000, deduct 8,000. Now here amount is 92,000. Now after this expenses, direct expenses, which is directly on the production part. So number 1 expense here, find out stock. After this wages, number 1 expense, we provided the wages to the workers for production part. So 2 wages 5,000 recorded here, okay. Now after this next one is, first of all see here carriage inward 1,000. So record here carriage inward 1,000. Next freight 500 is also your expense on production, 500 recorded. And the next one is octroi duty 2,500, record here 2,500. All the expenses recorded here, okay. Now the credit side, first of all sales, your income, you receive something. So 1,55,000 record here, 1,50,000 recorded. Now sales return, it means that sales return, find out sales return here return inward. Firstly goods outward gonna. So here after that returns inward, firstly outward in case of sales, then defected goods inward by the consumers. So here 5,000, 1,50,000 minus 5,000, here 50,000. 1,50,000 is your net sales available. After that closing stock at the end available in the company 20,000. So here write closing stock 20,000. Done all the items. See once check, opening stock done, wages done, sales done, return outward done, freight done, purchases done, carriage inward done, return inward done, octroi duty return done. Now see, if your this side expense side more total and your this credit side less total, it means your company is in a loss, business in a loss, okay. If your credit side more positive side, this one is your positive side, you are receiving everything. Here you are just giving like expenses, deducting everything. So deduction and addition. So here if you're this side more and your this side total less, it means gross profit. Like see here 1,50,000 plus 20,000, total amount is 1,70,000. Deduct 10,000, 92,000, 5,000, 1,500, 2,500, and after deduction your amount here is 59,000. You're this side more, you're this side less, credit side more, debit side less. It means your business in a gross profit of 59,000. So both side 1,70,000, 1,70,000, and you are going to transfer this amount to profit and loss account. Now see the explanation of this. Trading account shows the either gross profit or gross loss. Yes, either gross profit or gross loss. If your debit side more, your credit side less, it means gross loss case. And if your credit side more, debit side less, then gross profit. So gross profit is equal to net sales minus cost of goods sold. How to find out net sales? Total sales minus sales return. And cost of goods sold, opening stock plus net purchases plus direct expenses minus closing stock. Likewise, I explained you in early like how to maintain trading account in same way na. First of all, add opening, add net purchase, add all the direct expenses, then deduct closing stock. Now students, see your homework questions. What is discount allowed? How many types of discount available in accounting? How to compute gross profit? List the items available in the trading account. What is meant by debt? Explain the term octroi duty, capital and freight. Okay. And also refer this link, students, for more better understanding. Thank you.